Welcome back. In business, the 2024 Deloitte Africa Private Equity Confidence Survey shows that investment climate in East Africa is the fastest growing on the continent. The survey, which gives an analysis of the investment climate, further shows that with a projected regional gross domestic product rate of 5.8% in 2024, which is expected to expand, reaching an average of 6.6% by 2026, the region offers the best potential for investment. This, Deloitte says, could result in an increase in capital disbursement in the next couple of years. Jimmy Mbogo has more.
The investment climate in the country is shifting in favor of small and medium-sized enterprises. This is according to the latest data from Deloitte Africa, which shows that the region is witnessing a move towards smaller investment sizes and alternative capital deployment structures, such as private debt funds and evergreen funds, alongside traditional closed-ended private equity funds. According to the report, 54% of private equity firms expect an average deal size in Kenya to be below $25 million, an equivalent of 3.2 billion shillings in the next 12 months.
And that's where medium-sized enterprises sit. And that is really driven by the higher returns that you'd expect for these medium-sized enterprises, and also, the larger, more established enterprises are yielding lower valuations or lower returns, unlike medium-sized enterprises.
In 2023, for instance, private equity investment in Kenya stood at $600.3 million, an equivalent of 77.2 billion shillings, worth of capital deployed by PE firms across 95 deals. However, despite a promising outlook, challenges such as inflation, currency depreciation, and political uncertainties remain a thorn in the flesh of investors, even as PE activities in Kenya are set to increase, driven by economic reforms, investor interest, and favorable investment climate.
So the surge is largely driven by the anticipated economic growth in Kenya in general, and also in key sectors. We still anticipate quite increased investment in your financial services, manufacturing, and agribusiness, largely, and this is the same trend that we see across Africa, and also slightly followed by healthcare.
To take advantage of the private equity inflow into the country, small and medium-sized enterprises have been urged to ensure consistency in their operations to assure investors of a return on their investment.
Key thing for attracting PE capital is really, consistency around returns, consistency around governance, consistency around both ensuring that the business model is one that can actually withstand the test of time.
The rising cost of doing business and difficulties in achieving exit have also been cited as pressing issues, but with the country's macroeconomic environment remaining stable, Kimotho says Kenya will be among sub-Saharan countries that could reap big from the ongoing fundraisings. Jimmy Mbogo, Citizen TV, Nairobi.